You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday. Sure feels like a Monday. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Apologize for the late start. Technology is a wonderful thing until it doesn't work right, and then it becomes a real pain. So, anyway, we're here, we're live, and we're just going to dive right into our daily devotional. We started a new topic last week, winning the war in your mind. Today is day 2 of 7. Our scripture is Matthew 4, 1 through 11, and I'll be sharing it from the Message translation. Starting in verse 1. Next, Jesus was taken into the wild by the Spirit for the test. The enemy was ready to give it. Jesus prepared for the test by fasting 40 days and 40 nights. That left him, of course, in a state of extreme hunger, which the enemy took advantage of in the first test. Since you are God's son, speak the word that will turn these stones into loaves of bread. Jesus answered by quoting Deuteronomy. It will take more than bread to stay alive. It takes a steady stream of words from God's mouth. For the second test, the enemy took him to the holy city. He sat him on top of the temple and said, "Since you are God's son, jump." The enemy goaded him by quoting Psalm 91. He has placed you in the care of angels. They will catch you so that you won't so much as stub your toe on a stone. Jesus countered with another citation from Deuteronomy. Don't you dare test the Lord your God. For the third test, the enemy took him to the peak of a huge mountain. He gestured expansively, pointing out all the earth's kingdoms, how glorious they all were. Then he said, "They're yours, lock, stock, and barrel. Just go down on your knees and worship me, and they're yours." Jesus' refusal was curt. "Beat it, Satan." He backed his rebuke with a third quotation from Deuteronomy. Worship the Lord your God and only him. Serve him with absolute single-heartedness. The test was over. The enemy left, and in his place, angels. Angels came and took care of Jesus' needs. So, here in Matthew 4, we read about Jesus after his baptism, heading into the desert, where he fasts for 40 days and nights. And that's when the enemy comes to tempt him. Because he knew Jesus had to be hungry, Satan told him to turn stones into bread. Just as he did with Adam and Eve, Satan was trying to get Jesus to do something that wasn't part of God's plan for his life. That's also what he does to you. Jesus replied, "It is written, man shall not live on bread alone, but on every word that comes from the mouth of God." The enemy, realizing his first plan had failed, so he attacked Jesus from a different angle. And that's what the enemy does with you as well. Same method, new try. The devil took Jesus to the highest point of the temple in Jerusalem and dared him to throw himself off. Satan had decided that two can play this game, so he quoted Psalm 91. It is written, "He will command his angels concerning you, and they will lift you up in their hands, so that you will not strike your foot against a stone." Yes, even Satan knows the Bible. He wanted to tempt Jesus to prove he was truly God's son by trying to force God to show evidence of his love and care. Jesus stayed on point and simply answered, "Do not put the Lord your God to the test." Deuteronomy 6:16. That didn't work either. So Satan tried a different way of burrowing his way into Jesus' thinking. And again, that's exactly what the enemy does with you. He brought Jesus to a tall mountain, showed him the kingdoms of the world, and offered to give it all to him if Jesus would just bow down and worship him. Jesus had now had enough and commanded, "Away from me, Satan." He then quoted Deuteronomy 6:13. For it is written, "Worship the Lord your God and serve him only." Shouldn't we take the same approach that Jesus did? I mean, those of us who are Christians call ourselves followers of Jesus. 3 times in 3 separate instances and temptations, Jesus exposed Satan's lie and engaged the truth of God's word that he had been memorizing since he was a young Jewish boy. So the first tool I learned that renewed my mind and transformed my life was the replacement principle. Remove the lies, replace with truth. Once you grasp this tool, this weapon, you can begin to use it regularly to change your mind and your life. Jesus' clear example, detailed for us in Matthew 4, is why it is essential that we know the Bible. As followers of Christ, we prioritize reading the Bible, listen to Bible teaching, join Bible studies, and get God's Word into our hearts so we can wield the sword against the lies of the enemy. Let's pray. Heavenly Father, thank you for the strength and example of Jesus, who resisted temptation in the wilderness through the power of your word. Help us to stand firm against the schemes of the enemy, trusting in your promises and relying on your truth. When we face trials and testing, remind us that you are our refuge and strength. Guide us to live by every word that comes from your mouth, and may we always worship and serve you alone. It's in Jesus' name we believe and pray, and everybody said, amen. Amen, and happy Tuesday. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow is up 454 points, just over 1%. The Nasdaq is up 92. S&P 500 is up 42. And the Russell 2000, our man in the street, is up 35 points, a little over 1.5%. In the commodity basket, crude oil is down $1.47, trading 76.41 last. That's a drop of almost 2%, or $1,470 per contract traded. Gold up $10.40, trading 27.59.40 last. Silver up 35 cents, trading 31.50 last. That's a gain of over 1%, not quite 1.25. In the Asian markets at the close, Nikkei posted a gain of 125 points. The Shanghai dropped just over a point. The Hang Seng gained 180 points, which is almost 1%. And in the European markets at the close, FTSE up 27, the DAX up 51, the CAC up 37. So we had a mixed day in Asia, and that's just due to a less than a 2-point loss in the Shanghai. It was a green day for the UK, and it is a big green Radio Tuesday so far here in the US of A. With that, let's look at the news. As we all know, Donald Trump, 78, was inaugurated as the 47th President of the United States at the Capitol Rotunda yesterday, officially beginning his second non-consecutive term. J.D. Vance, 40, became the third youngest vice president in U.S. history. Trump also signed a round of executive orders, including suspending the U.S. TikTok ban for 75 days, withdrawing from the Paris Climate Treaty again, and revoking 78 Biden-era executive actions. He also pardoned about 1,500 defendants charged in the January 6, 2021 storming of the U.S. Capitol, and commuted 6 defendants' sentences. Separately, as the president was being sworn in, it was announced that Joe Biden had preemptively pardoned his family members, along with Dr. Anthony Fauci and others, as his last act as president, to guard them from potentially politically motivated investigations, something he knows a little bit about. But you typically think of someone being pardoned for something they've done wrong, right? So, this is going to put quite a stain, if there's room for it, on the legacy of Joe Biden. What is it he's trying to protect his family from? Perhaps it was all that money that showed up in their bank accounts. I don't know. I guess only Joe knows. And perhaps his family members. The Federal Reserve now needs to be on Trump watch if it wants to engineer the proper dose of monetary policy, according to Bank of America chief Brian Moynihan. They've got a new administration with a new set of fiscal policies, and the monetary policy has to respond to that. That's from the B of A chair and CEO. Moynihan added, "We are not a central bank-led economy. We're actually a private sector-led economy." And what that means is the Federal Reserve has nothing to do with the federal government, about as much as FedEx. Okay? It is a private enterprise, a cabal of the very wealthy, evil from day one. It has put America $36 trillion in debt. And if you've not read the book, The Creature from Jekyll Island, you can Google it up and read it for free on the internet, and you'll wonder, how in the world did this ever happen? Here we are all these years later, still asking that same question. Bloomberg tells us that the second busiest retail quarter in Chicago is typically a bustling area dotted with taquerias and Mexican grocery stores in the southwestern part of the city. But by Monday afternoon, it had turned into a ghost town. Word had gotten out over the weekend that the city could be the target of potential immigration raids after President Donald Trump took office, spreading anxiety among residents and business owners alike. Trump's inauguration speech and boasts of cracking down on migrants only heightened the fear, while the frigid weather also kept a few people indoors. Foot traffic at the 2-mile stretch of 26th Street in the Little Village neighborhood plunged by some measures. The decline had hit the 50% mark, according to the local Chamber of Commerce. "It's going to be disastrous," Aguilar said in an interview. Now, she heads the local Chamber of Commerce. If raids happen and people are too afraid to go out, it's going to be an impact that's going to last for years. 4 years, to be exact. Trump moved quickly yesterday to fulfill campaign pledges after his inauguration speech, announcing measures to end birthright citizenship and mobilize troops to step up border enforcement. He shut down the CBP-1 app used by migrants to cross the border and ask for asylum, dashing the hopes of many waiting in Mexico for appointments with U.S. authorities. And the Remain in Mexico program that Trump engineered is supposed to go into effect. It hasn't been lost on Meta employees and their chief executive, Mark Zuckerberg, that we are going through a true metamorphosis. In recent weeks, employees say they've grown increasingly concerned and unhappy over their founder's public embrace of Donald Trump, questioning whether the policy changes he has implemented at Meta will stain its reputation. "King Donald is up there and Mark is afraid of him," said a former Meta executive who was among the half-dozen insiders that Yahoo Finance spoke with. "He's a chameleon bowing to the king." Case in point, Zuckerberg was front and center at Donald Trump's inauguration yesterday, alongside several of his tech rivals. That evening, he co-hosted a black-tie inaugural reception to celebrate Trump and Vice President J.D. Vance, with political donors Miriam Adelson, Tillman Fertitta, and Todd Ricketts. Looks like there's a new world coming. Let's see what it looks like a week out, a month out, a year out. Oil and industrial metals declined after President Donald Trump reignited trade war fears with his tariff threats against Mexico and Canada, while gold rose as investors sought safe haven assets. The prospect of a renewed global trade conflict has bearish implications for commodities. Given the risk to consumption and growth, Trump held off from pledging levies on China, providing some relief for soybeans and the corn markets for now. The tariff threat is real, and it carries the risk of lower economic growth. On his first day back in power, the president said that by February 1, he may impose import tariffs as high as 25% on goods from Canada and Mexico, which are major crude suppliers in the U.S. He also signaled a push to boost domestic oil and gas production and ultimately lower prices. The dollar rallied, making most commodities priced in the currency less appealing. Brent slipped near 79 a barrel in London, while copper briefly dipped beneath $9,200 a ton. Aluminum and lead fell more than 2% during trading on the London Metal Exchange, while zinc dropped more than 1%. And although Elon Musk is part of Trump's team, Tesla stock sank more than 3% in early trading today. It's now down only 2%, reversing pre-market gains on the first trading day since the inauguration of Donald Trump, as the president scrapped a pro-EV policy put into place by his predecessor. Trump, on his first day, wasted no time shedding the skin of the outgoing administration, revoking 78 executive orders made by former Democratic President Joe Biden during his tenure. One of those Biden-era policies that was revoked mandated that half of the new U.S. cars manufactured be electric by 2030. So, some say Elon's going to get special treatment because of his new position. Yeah, doesn't look that way quite yet. So, we'll see how that relationship weathers the storm. Logic 247, that's our 24/7 around-the-clock Emini alert service. Over the last 338 weeks, we've issued over 18,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened last night at 6 p.m. Eastern, we've issued a total of 14 alerts. Now, this recap was done at 7:30 a.m. this morning, 7:30 a.m. Eastern, by Valerie. So some things may have changed. She'll, of course, update it this afternoon, as she does. At the time she did the recap, we were still waiting on the outcome of 5. That gave us 9 actionable alerts, of which so far 0 has been stopped out. Last week we ended up at 7% stopped out. Now, the purpose of the logic alerts, while yes, you can trade them, the true purpose is to help you to learn how to read a chart. Each logic alert has an entry price, an initial target, additional targets, final trade to target. The initial target is designed to help you get your goal for the day. But if you use them properly on a 30-minute chart, you'll quickly learn how to spot potential areas of resistance, potential areas of support, and you'll be able to find the windows of opportunity in between. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts, and they're a little bit different. The logic alerts can come out anytime around the clock because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. But the CTAs are published as a static report most days 5 minutes ahead of the Globex Open. And last night we did get them out 5 minutes ahead of the open. If you're a member or trial member, you should read this information up here. It's important. If there's anything you don't understand, ask and we'll explain it to you. But 5 minutes before the open, all of our members had all of these targets. The S&P 500, the Dow, the Russell crude, which is now rolled forward to the H contract, NASDAQ, gold, silver, and bonds. So all members, all trial members had all of these targets 5 minutes ahead of the open. Some days I'm not able to get them out 5 minutes ahead of the open, and on those days I put a note in the discussion group that they won't be out early. So you're not sitting there waiting for something that may not come out. Alright, here's the daily chart of the S&P. Remember we talked last week, as soon as this blue and climbing showed up, we said that's an indication that we're going to probably see higher prices. And we did. We spent one day with resistance at this trend line, and then we broke through it, and now we're up almost to the 50% fib extension. I'm going to redo these fib extensions at some point because price traded below the swing low that we used to create them. But as you can see, important prices, important areas, once defined, remain that way. Institutional traders look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. The institutions have accounts in the hundreds of millions, billions, even trillions of dollars. And they trade an incredible size. So they're the ones who actually move price. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll spend 2 minutes looking at the daily chart of whatever you're about to trade, it will give you a good idea of what the deep pockets are up to. So not only do you get a free look over the shoulder of the deep pockets that move price, but you're able to see where major resistance and major support is. As you can see, the low of today's session was down at the 24% fib extension, and the high so far at the 50% fib extension. We get above the 50, then we've got a couple of highs right here that could be potential resistance. And then of course this high right here, and then right here is the all-time historic high. So this trend line here, we've traded below it. Question is will it become resistance if the market continues higher? Seems to be an awful lot of optimism out there in some areas, and in other areas maybe not so much. On the ES, the vertical lines separate today, Tuesday, from yesterday, Monday, and back over here is Friday. These are last week's weekly trading zones. The weekly trading zones normally come out Monday morning at 6:15 a.m. Eastern, unless there's a Monday holiday. If there's a Monday holiday, then they come out Tuesday morning at 6:15 a.m. Eastern. So on tomorrow's broadcast, you'll see this week's zones. But the alerts last night were based on last week's zones because the new zones had not yet come out. So we had a slightly higher gap open, okay, but we were not able to take out the high that was put in on, of all days, a holiday. As I've told you, price can move a great distance on light volume, and there was light volume yesterday. So we had the little higher gap open, and I quickly filled the gap, came all the way down to the short target. We then spiked the target and hit the weekly trading zone at 59.97/98. We've published the zones now every week for our members for 15 plus years. December marked 15 years. So right now, we are slightly above yesterday's high. The high that was put in on the holiday yesterday, 60.78 1/4. We've now taken that out. Our high today is 60.8075. So we've hit the short CTA target, and now we're looking to hit that long target if we can overcome the 50% fib extension. On the Dow, this was the opening candle last night. Again, we had a gap higher open. It filled in that first 30-minute candle. We attempted to take out the holiday high just like the ES, and we failed. And we found support right here off this little low from Friday. Never made it to the short target. Buyers came in, got us back above the BBC, and took us all the way up to the long target. On the Russell, gap higher open, filled pretty quickly, hit the short target, and then we had this huge spike down last night, but it quickly recovered. All that happened in 30 minutes. Consolidated along the BBC, got above the BBC, and now we're headed towards the long target at 23.31. The high of the session so far is 23.27.6. Today's high 23, or this current high is 23.27.6. So you got a double top right across there. Okay, Michael is here, so we'll pause and he will give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform. And then I'll come back, finish the recap of the alerts, and close things out with our good word for the day.
All right, here we go. Everybody ready? Did you have a good weekend?
Looks good. Yeah, how about you?
Yeah, it was pretty good. It was pretty good. Nothing catastrophic.
That's good.
Yeah. I'll take the win. All right. So, here we go. Good afternoon, everyone. Today is Tuesday, the 21st day of January 2025. Wow. January 2025. If you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. Now, there is no credit card required for the trial, and click on that purple button. It will bring you to this registration page where all that we ask for is your name, your email, and your phone number. There's multiple choice questions. If you would answer those, honestly, that would be great. If you're going to use NinjaTrader charts, give us your machine ID. I will show you how to get that because it was a problem this morning with one fella. Your machine ID is here. You go to your NinjaTrader control panel, go to Help and About. This is your machine ID right here. Right, it says machine ID. Copy and paste that in an email to us. Don't just send me a picture of this. Copy and paste that in an email to us. All right, or fill it out right here. If you fill it out right there, that would be fantastic. You should get TradingView if you're going to trade with what we're using in the room, because these indicators down here at the bottom are only on TradingView. So if you don't have TradingView, then go here to trading platforms and watch this little 3-minute video, but really just click on this right here. You click on this, it'll bring you to this page. Bring you to this page. Click on monthly, and those are the monthly prices. It's a 30-day free trial when you sign up for TradingView. Okay, so you can sign up for TradingView and it doesn't cost you anything. You do have to get real-time data. That's going to cost you $7 a month, unless you can hook your broker up, which may or may not be free for you. But that's what you need to do to get the charts running, so you'll be able to keep track of what we're doing in the room in the morning. All right. So we had a pretty good day today. I did a lot of talking, so I didn't do as much trading, but we did manage to get 31 trades off, but it wasn't like a 52 trade day like last week. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 21st day of January 2025. We made 249 ticks on the NQ. We lost 5. On the Russell, we lost 10 on gold. We made 40 on the ES. Put us at $1,620 with one contract this morning. Today it took 23 minutes and 9 trades to get to the goal for the day. At that point, we're up $3,650 with 10 contracts on. And we took a total of 31 trades. Now, it took so long because I screwed up 2 trades right at the beginning with the ES. I stopped out on 2 trades right at the beginning with the ES, and I didn't have all the indicators positioned properly. It was my fault. But anyway, on the month now, we're at $22,500, and that is over 12 business days, averaging $1,875 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you would have only worked 1 hour. In the 12 days now, you would have worked 1 hour. And most of that was today, these 23 minutes today. You would have averaged $2,196 per hour. You'd be at $2,342 with 1 contract so far, right? That is just sitting there taking trades until you get the goal for the day, right? $2,342 so far with 1 contract. That's just about the cost for the mentoring package right there, guys. If you're not doing it, I don't know why. All right, let's get into the trades. Now on the gold and on the Russell, we didn't have many trades at all today, right? We had a couple on gold, started out right here, and we stopped out on that one. And I didn't mark them up on gold because I was kind of favoring the ES and the NQ today. But if you go through here, you'll see there was a long right there, followed by a short right there. That's at the open of that bar, okay? Followed by a short at the open of that bar, followed by a long at the open of that bar, a long at the open of that bar, a short at the open of that bar. This is the first stop out right here, a long at the open of that bar. So there were all those winning trades that I missed after taking that first stop out. I missed 1, 2, 3, 4, 5, 6 winning trades in a row. And then there was one more stop out right there. And then the next one was over here. That would have been stop out 2, right here. And the next one was right here. The open of that bar would have been a break even, or maybe profit. It went down pretty good right there. And then the open of this bar would have been a long. That would have been a nice profit. The open of that bar would have been a short. That would have been a stop out. I'm not going to do this for all the markets. It's not too hard to do it for gold because it doesn't have a ton of trades. We did take that one and we got 5 ticks in profit. And there was another one right here. You'd have bought the open. That was like, it would have been a stop out or a break even. Right here, looks like it might have been a break even or a stop out. So I'm going to go 5 ticks into profit from the entry point. So right there, let me do this because it's supposed to be really tiny to you. From here And at 55.7, it dropped down there to 55.2. So I guess it didn't go 5 ticks. Okay. That would have been a stop out then. And this would have been a nice gain. Right there would have been a nice gain. And over here, there would have been a short right there. That would have been a break even. There would have been a long right there. That would have been break even or some profit. And there would have been a short right there. Would have been definite profit. And a short right now. If I can find my DOM, I'll put it on. I can find my DOM in time. And I think I can. There. Okay. I'm gonna now I'm gonna end up missing it. Hang on. I'm still trying to get the trade on. Hasn't filled me yet. There, it just filled me. Okay, so there's the trade right now. The open of this bar right here at 56.1. Oh, this is gold. I put it on the wrong market. Crap. Hang on. I can still get 56.1. Okay, I grabbed the wrong time and I was just hitting the red area there. Here we go. So I'm in at 56.1 on the gold. And I'm going to take a break even here on the Russell trade that I just accidentally put on. I'm telling you, today I'm off a little bit. But so that's where we are with gold. All right. We're short right here at 56.1, exactly where we should be. And that was what the day looked like in gold. Now the Russell didn't have a bunch of trades either. We had just a couple. I'll show you what that looks like. Okay, we started out with a nice win right there. We had 20 ticks on the first trade, and then we stopped out on the second one for minus 25 ticks. Excuse me, my voice is going in and out all day. We had, that would have been a long trade right in there, which would have stopped out. That would have been a short trade right in there. Both of those would have stopped out to the tick before giving you what you wanted. Followed by a long trade there, that would have been a win. A short trade in there, that would have stopped out. A long trade here, that would have been a win. A short trade right there, that would have been a win. A long trade here, pulled back a bit, but it would have been a win. A short trade right there would have been a break even. A short trade right there would have been a break even or better. A long trade right here would have been a win. A long trade right here would have been a win. And that's where we stand on Russell. So we ended up with minus 5 ticks on the Russell. Okay, minus 5 ticks on the Russell today. Not counting that break-even trade I just took by accident. All right, the ES, we had a bunch of trades on the ES today. So let's go all the way back to the beginning on the ES. You can see I was using the ES for training this morning. And this is where I started. I was screwing it up in here. I didn't have the slingshot down there to help me see the divergence. And I was just taking trades that went into the overbought and oversold without anything else on there. Now, taking trades that just go into I'm going to slide this off to the side. I'll let you know if I stop out. But taking trades that just go into the overbought and the oversold is something that you can do. And we discussed this last week. But you need to have one other little thing in here. This guy, the YBR, wasn't that showing? No, let's do it on this one. Maybe it'll show on this one. There it is. You need to have the YBR on there. All right, to give you some sort of direction. So if I had the YBR on there, I wouldn't have been taking any short trades in here. I'd only been taking long trades. Right? I'd been taking long trades either when it goes into the oversold or when it pops out of the oversold, whichever you want to do. Right? Both of them are still good. You don't need the ultimate slingshot down there for that. When you're above the YBR, if it goes into the oversold, you can buy the open of the next bar, or you can wait till it comes out of the oversold and buy the close of the next bar. Usually it's going to be a bar length or so in difference. We're still in that gold trade, by the way. I'll bring it back over so you can watch it. Usually it's going to be a bar or so in difference, but when you're using the YBR, you're going with the trend. So if you're above it, you're only going to be going long, and if you're below it, you're only going to be going short. When it comes out of the oversold, when it goes into or comes out of the overbought in this case. So right here, you could have sold the open of this bar, sold the open of that bar, or waited and sold the close of that bar. Okay. Now you could have sold the open of this bar, or waited and sold the close. We did stop out on that gold, and sold the close of this bar right here instead. All right. Selling the open would have stopped you out. Selling the close would have gotten you some profit in that case. Yeah, you see the difference? I don't have the question box up here, but I just want to make sure that anybody that's watching here that didn't catch that last week when we added that in, after the partners meeting. That was part of all that last week. Okay, let's slide the gold back over here. All right, so the trades that we did take, I stopped out, then I had a break even, then I had to stop out, so I was minus 20 at that point, then another break even. Then I started to come back. I got 4 ticks on that one, then a break even, then another break even, then I got 14 ticks to get me to minus 2. I got 12 ticks to get me to plus 10. Then 2 ticks to 14, then 4 ticks to 18. Then there was another one in here that got us, I think it was probably right here, this one right here. That actually got us from 18 to 32, so that would be 14 ticks there. It was right there. Got us from 18 to 32, and then we stopped out from 32 down to 22. And then we got 2 ticks to 24, 10 ticks to 34, 2 ticks to 36, and a couple break evens. From 36 to 40 right there, and then I forgot to add this one in at the end, whatever that was. 40 to whatever that was. I don't remember what it was. I guess I could go look. Let me go look and see. That was the ES around, what time was that? 11:22. I sold at 65.25 and I bought back at 64.25. So it was 4 more ticks right there. Okay, I sold up here at 65.25 and I bought back at 64.25. So I got 4 more ticks at the end. So I really have 44. And that was the ES. I'm not going to, I guess I can go over everything that happened in the break. There weren't that many. If you're using the YBR right here, you're just going long when you're above it, right? So right here, you can buy the open of this bar or wait for the close and sell the open. Or wait for the close and buy the close of that bar. The close would have stopped you out. The open would have gotten you profit. The next one right here, if you bought the open of that bar, that would have pulled back and stopped you out. But if you waited and bought the close, then you would have had some profit on it. In here, there wasn't anything that happened on the short side. Then in here, there was another long right there, another long right there, another long right here if you waited for the up close, or right there if you didn't. Now, if you didn't right here, it went enough to get the stop to break even, so that would have been a break even trade. However, if you waited for the up close, you would have had that. So it's about, however you feel about trading is what it is really. Right here, you would have waited for the up close on that. You would have been there. But if you got it at the open, you would have been right there. It's the difference between break even and not break even in this case. Now, if you throw this back down here, oops, not that, sorry. Throw this back down here, and then you trade in both directions, right? So you're selling the up close, you're buying the down close, you're selling the up close, you're selling when it goes into the overbought, you're selling right here at the open, selling the open. Right here, you'd be selling the open of this bar. Right here, you would have been selling the open of that. Okay, so there's lots of different options, and which one works best? Well, honestly, they all work really, really well. Whatever you're doing, they all work really, really well. But we ended up with plus 44, it looks like. So I'm going to change that out here. Plus 44 on this guy. So it's $1,670 per contract this morning. Okay, it's a $500 difference with 10 contracts on. And now we get into the NQ. Now, we didn't have as many trades on the NQ as we did on the ES, but we had some pretty good ones on the NQ. And you can see I was doing some trading with the NQ too. All right. So we started out here. Our first trade on the NQ was right here. We picked up 4 ticks on that. And the next one, we had a break even, and then we had 20 ticks to get us to 24. Then we had a 75 tick win on that one right there. That got us up to 7. Oh, sorry, it wasn't a 75 tick. We went from 24 up to 78, so it was a 50-something tick win, 54 tick win. We went up to 78 from there. And then the next one right here, we picked up 75 ticks. That got us to 153. Then we had a small win, got us up to 157. Then another good sized win got us up to 197. Then another pretty good win got us up to 213. Then a break even. Then went from 213 to 217. And then I missed something in here because we went from 217 to 240. 213 to 217, then 217 to 249, and it looks like I missed this last one, whatever that was. And what time was that at? That was around 11:16 on the NQ. Let's see. NQ. I bought at 33.33 and I sold it 41. Does that look right? Yeah, I bought at 33.33 and I sold it 41. I'll show you. Let me get that print for you. It was the NQ. Where the heck is it? NQ right here. Here it is. I bought 10 at 11.18 and I sold 10. 33.33. So we'll just say 34. We'll make it a nice even number. It's 28 ticks. It'd actually be 30 ticks altogether, but we'll just call it 28. Okay, so that's what we ended up with on the NQ. And then during the break in here, there was a short right here. So on the open of that bar, and that was it. Not that much happened during the break. Let me go fix that over here too. On the NQ, we need to put 267. That's $1,000 per contract. So that was $1,500 difference with 10 contracts. Only 150. Yeah, a little more than 150, but 170 with one contract. But anyway, during the break, just using the divergence down here, there was one trade right here. I guess there was one right here, right? Yeah, one right here that would have been a break even. It went 10 ticks in a profit. I mean, 5 points in a profit from here to here. That would have been a break even. I guess right here would have been a trade too. That would have, I don't know, 60 tick stop. Did it go 15 points against 24? I had to go down to 9. 950 right there, but then this one would have gone to 9. But over here, your entry point would have been here at 450, and it only went up to 25. I had to go up to 950 right there. So it may or may not have been a trade. A break-even trade. It would have been really close. If you would have gotten a little bit better entry than the exact entry right here, which you probably would have gotten because it immediately pulled back, then you would have been able to stay in that trade for this leg up. But this would have been a win, and there was nothing else using that. Now, if we come back here and we take off the ultimate slingshot, we go back to the YBR, right here you would have been buying the open of the next bar, which is right there, or waiting until it came out of the overbought and buying the open of that bar, which is right there. Same thing with this one, buying the open of that bar, which is right there, or waiting until it came out and buying the close of that bar, which is right there, but the open of the next bar. Sorry. And again, you just taking long trades in here. So you would have been buying the open of this bar or buying the close of that bar, basically in the same place right there, which one you do. That's what happened during the break, right? On the short side, nothing happened in here on the short side. All right, do you all see that? This is pretty simple stuff. And it happens again and again and again and again. And there are a lot of people making a lot of money with this. So if you're not doing it, you need to get bored. I mean, there's a lot of guys that are in here right now that are their actual partners that aren't doing this yet. And I really don't know why. But anyway, it is now 1:15. Let's see if we can put some trades on. Okay. Let me move this and this. Oh, so yeah, for anybody that's coming in on YouTube right now, or anybody that's in on YouTube right now, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. That will bring you to this registration page. Just fill out the form. You really need to get TradingView, right? Right down here gives you TradingView login ID. if you don't know how to get TradingView, go here to mytradingiq.com, go to trading platforms, and click this link. Watch this video, click this link right here. That's all you need to do, okay? That is all that you need to do. Gives you TradingView login ID. Now your TradingView login ID, when you hover over this right here, right there, whatever you're logged in as, that's what we need to enable the indicators for you, okay? That is it. All right, now you saw these little purple things down here, the TV trade stuff. You guys don't need to worry about those updates. The ones up here, if you have purple things after the TIQ context and Cox PP, those are the ones that you guys need to worry about. Unless you're a TV trades guy, then the stuff down here doesn't apply. But if you're a TIQ, then the stuff up here with the TIQ does. And that's what I put in there last week for everyone. That is the YBR right here. I don't know why this isn't showing up, but that's the YBR right there. Okay, maybe it's out of view, something. I don't know why the heck the YBR is not showing up on the ES. It doesn't make sense. But it shows up with the context PP. Yeah, it shows up with the context PP, but not the context. That doesn't make any sense at all. Anyway, that's that. All right, so now we'll come over here. And right here was a short right there on the Russell. Okay, now I'm not sure if it's on too far into profit right now to be able to take the trade. The entry point should have been here at 28.2 and it's dropped down to 26.8. So yeah, it has gone too far into profit. 10 ticks is the maximum that it can go into profit before you have to get filled, right? If you don't get filled by 10 ticks, you missed it. It's too late. Okay. All right. So now we just have to wait. Does anybody have any questions at this point? Anybody? Questions at this point? All right. Well, we'll just wait for the trade dips. There's nothing other than this one right here. You know, I haven't gone out to look at the other markets yet today. You can look at Bitcoin. I got a message that said Bitcoin was up pretty good. Yeah, it is. This is the all-time high right here, right? 109,358. I think that's the all-time high on Bitcoin. Now that Trump's president, hopefully, maybe we'll see 200. Who knows? Let's go way out to here. See what this guy's doing. Okay, it's up today anyway. Is this a daily chart? I believe this is a daily chart. Yeah, so this is all-time highs right here, at least most recent all-time highs anyway. For XRP, and right now it's got to sell. You would sell the open of the next bar. That's where it is right now. Now these are daily bars, so what it's suggesting is to sell the open of the next bar. And the last time it had the sell of the open of the next bar was right here. It dropped down pretty significantly the last time it had that. All right, so we'll just have to wait and see on that. If we break it down a little more, down to like a 30-minute. And if I do this, what is this? If I put in new TV trades on there. I had a sell right there at the open of that bar. I had a buy at the open of that bar. It doesn't have anything in here right now. on the 30-minute. But anyway, good to see what's going on in the crypto world. I'm excited to see what's going to happen with all that with Trump, because if he embraces AI and cryptocurrency, it could be the kind of run that we had when Clinton became president. When the internet first started to really blossom, there are a lot of things in play here that say, if that we could have just tremendous next 4 years and even beyond. If at the end of it all, Vance is groomed well enough. And well beyond, I would think. And pretty optimistic. My glasses always half full anyway, but I'm pretty optimistic of things right now. Hoping. All right. Now we don't have any trades here right now, guys. Do you want to look at any of the symbols? Anybody want to look at anything else? Any other time frames? Look at the NQ on the 31 again. We haven't looked at that in a little while. Okay, so looking at it on the 31, using the, you'd have a long right here on the 31, right? Using the YBR, going into the oversold, you'd buy the open of this bar right here, right there. You'd buy that right there where that line is. Right. Now you see that line is moved. That line is moved up to the close of this bar right now, but that's where you would have bought it, right there. Okay, and you're above the YBR, so you'd anticipate that it's going to run up from here. Now this is a 31 range, so you move the stop to break even after 4 points in profit, just 16 ticks. Stop goes to break even. Okay, that's using it without the slingshot, like this. See, you have so many options now. You can do it like this, so that when it goes down together, like that, you can still get a trade out of it. Dan, are you in here? Dan A. Dan is not in here. This sort of plays right into what he was talking about the other day when we had a meeting. All right, so over here on the gold right now, if we put the context PP on there with the YBR, let's see, we're going to go in and shut off the ribbon here. Stick the YBR in there. So it's just got to get into the oversold. Then you'll be able to buy it. You guys see all this? Does it make sense to you? There's 6 minutes left in here. I don't know if we're going to have time to get another trade on. And Bird is not in here, is he? No, he's not. Graham's not in here. Okay. So I'm just waiting for something. Give us an indication here that we should take a trade. Just don't have anything right now. But it's all good. What do we have for news events? I haven't even checked that today. Thought we had some stuff coming up other than, the inauguration yesterday. Today we had new car registrations, way better than expected. Hey, I'm in that group. I got my truck registered last week, Friday. Wednesday, that's tomorrow. We really don't have anything on impact tomorrow. Thursday, initial job lists, Thursday morning. Nothing else high impact. And Friday, look at all this high impact stuff Friday. Consumer sentiment final. That'll be interesting to see. The sentiment. And existing home sales, that'll be interesting to see too. All right. Oops. Let's go back here. All right. So right here, using the YBR setup, you would have gone long on gold right here. Right. You could have gone long on gold right there, or you could go long on gold on an up close. Right. You could have gone long on gold on the open of that bar when you get into the oversold. You don't need the separation if you're using the YBR. Right? You don't need to have the separation if you're using the YBR. Or you could go right now, right there. Okay. Those are the two options for that trade. You could have gone on the open of this bar when it got into the oversold, or you could have gone on the up close right there when it came out of the oversold using the YBR. Either one would have worked out so far. I'm going on the open, obviously would have worked out much better, but the ES is going to be in the same position here in a minute. Okay, it all depends on how comfortable you are trading when the indicator's going in the opposite direction. There's a thing I created the other day that it was hard for me to get my head around trading totally against the indicator. So I made the indicator, I multiplied the result of the indicator times -1. So the indicator was actually going in the right direction to help me get my head around it. It was something else that I was creating last night. I showed it to you guys this morning. Because it was, when it was up here, it was saying buy, and it was down here, it was saying sell. It was hard for me to get my head around that. So I just multiplied the result times -1, and it flipped everything around. All right. So I'm waiting. Waiting. I got it filled on. I bought it on the on the up close. I didn't get a very good fill on it, but I bought it on the up close. And I'm going to throw my stop at break even right now because we're ready to go short right now. It's actually ready to turn around and go the other way. So I could put 2 of those there. There, we just reversed. Let me get rid of that. Okay, it was the equivalent of selling the open of that bar, except I'm off by 8 ticks or 6 ticks. When it went into the overbought by itself like that, selling the open of that bar. Because we had the separation. Larry F. What was that thing you sent to me at like 3 o'clock in the morning? Are you trying to add it to your calendar? Okay, I didn't realize I just ran out of time. All right, so guys, so far on the day, In the morning session, we're up 267 ticks on the NQ, -5 on the Russell, -10 on gold, +44 on the ES. $1,760 with one contract. Took 23 minutes and 9 trades to get to $3,650 with 10 contracts. We took a total of 31 trades. So on the month now, we're at $22,640 over 12 business days, averaging $1,886 per contract per 2-hour business day. Same for the year right now. Following the 24/20 blueprint, we are now averaging $2,196 an hour. We've worked a total of 1.06 hours this year, and with one contract, quitting when you get the goal for the day, you'd be up $2,342. All right, over the 12 days that we've traded so far. This is our best month, and it's just going to keep getting better and better. All right, if you've not taken a trial, go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. It's going to bring you to the registration page. Just fill it out. All right. That is it. With that, I will pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you're ready, I'm going to break even on the gold trade right now.
Yep, you want me to wait?
Oh, yeah, I'll bring it over so everybody can watch. It's going to take me out of break even right here, I think. But, yep, break even. Okay. All right, now you can grab it.
Okay, recap of the morning session.
Today, it took 23 minutes and 9 trades to get to $3,650.
Good job.
Thank you.
All right, guys, pick up where we left off with the NQ. Okay. Again, these are the targets that went out 5 minutes before the open last night. Okay. Now, yesterday was a abbreviated session because of the holiday. So the last candle printed right here yesterday at 12:30. So then we opened and we ran into blue and climbing. And when blue and climbing gets directly above price, that can often be resistance. And it was on its way to becoming red and falling, which is bearish. And that sent us all the way down to the short target, to the weekly trading zone, through the weekly trading zone, and then we continued all the way down to right here. Buyers came in. A lot of buyers came in right at 8 p.m. Eastern last night. Across most of the markets we've looked at, that sent support will always send the market looking for resistance. The pullback to the BBC holds more often than it doesn't. Eventually it will trade through, but the pullback held. Resistance sent us to support at blue and climbing. Price made its way above the BBC. And then we put in this high right here, which failed to take out that high. So that's a sign of weakness. So that sent us back down to the short target. Support bounced us up, and then we hit it again. Now you'll notice these wicks start to get shorter. Okay, so we get back above the BBC, and now with this most recent high at 21,772. Yesterday there was a high at 21,778. So just barely failed to take it out, which again is a sign of weakness, but price is above the BBC. When the price is above the BBC, we anticipate higher prices. We've also got blue and climbing. So I would suggest there is a pretty good probability that by end of business today at 5 p.m. Eastern, that we just might on the NQ take out this high from yesterday. Crude oil. Crude having a downtrend for a few days. Again, the vertical lines separate today, Tuesday, Monday, Friday, Thursday, Wednesday. And these are the zones that were published a week ago, Monday morning at 6:15 a.m. Eastern. Whenever there's a Monday holiday, the zones come out on Tuesday. So they came out this morning at 6:15 a.m. Eastern. And so on tomorrow's broadcast, they will be on my chart for the broadcast. Because any alerts that go out today will be based on this week's weekly trading zones. And all alerts are published for members and trial members well ahead of them triggering, often hours, in some rare cases, even days. So no woulda, coulda, shoulda. It's just learning how to utilize the information that's provided at the appropriate time, which requires learning how to read a chart, how to know where to anticipate support, where to expect resistance, and finding the windows of opportunity in between. So support here at the weekly zone set us up here. Okay, and you'll notice this is right where the step line traded through blue and climbing, turning it to red and falling, right at that high, right there. See how the step line crossed? So blue and climbing here turns to red and falling. That takes us below the BBC. It takes us below the weekly zone. That takes us down to the short target. We put in a low on the session so far at 75.05. If you scroll over here, you'll find out what in-market structure created that support. Support, again, will send the market looking for resistance, which I found at the zone. Again, that's the zone that was published a week ago Monday. Okay, a week ago yesterday. Resistance sends the market looking for support. It's now run into blue and climbing, but we've gotten below blue and climbing, so it looks like blue and climbing is going to curl and become red and falling. If that's how it plays out, then you should expect price to trade at least to this point where red and falling turn to blue and climbing, and possibly this low put in right here at 75.05. On gold, this is where we opened last night, right below the BBC. So we hit the zone resistance, which sent us back to blue and climbing support. In fact, this low right here, as you can see, that's buyers coming in just ahead of that low right there. So that sends us back up to the long target. Now you had a bearish cross right here. You have a bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance, and it was. So we consolidated at the target for a few hours. Blue and climbing finally turned to red and falling, and that dropped us right down to the zone, through the zone. And again, we had a series of lower highs. There's a low, higher low, higher low, higher low, higher low. Sign of strength. So, red and falling turns to blue and climbing, and off we go, up to and through the target. And now we're just doing some wide-ranging consolidation at the zone. When the step line crosses blue and climbing, as it's done now, we anticipate a retracement back to the VBC. When blue and climbing gets directly above price, that can actually become resistance because it's on its way to becoming red and falling, as you can see right here. Blue and climbing gets directly above price, and then see what happened. Okay, so is it possible that we could trade through blue and climbing and take out this high? You got to embrace all possibilities. Gold is extremely bullish today, but if all of a sudden it starts to drop, just remember, this was the heads up. Silver, this was the opening candle last night. Set us up to the zone, which is 3131/32. Ran into resistance right here. That sent us back down to the short target all the way through the VBC. We traded through, then we retraced, then we hit the short target. And then red and falling turned to blue and climbing. And when that happens, you just expect higher prices. And that's what we got. All the way back up to the long target, where we have now consolidated for a few hours. Now this high that was put in early last night at 31.52, it was taken out by 3 pennies, 3.5 pennies right here, and then failed. So when we put in a higher high by just a little bit, we have to be suspicious of that until price proves itself. And this looks like it wants to prove itself, so we'll see. The step lines in the process of crossing blue and climbing. We may run into a brick wall here. You can look over to here, to here, to here, the spot areas of potential resistance. If we do hit a wall of resistance, that'll send us back to the VBC. Again, the pullback holds more often than not. If it holds, we get another leg to the upside. If it doesn't hold, then if price were to get below the VBC, right here you've got a bullish cross. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move like this, the first time price revisits that area will almost always be good support. Just like this bearish cross here, which led to an extended move. When price came back to that area, what did it find? Resistance. It sent us to blue and climbing, support, and then sent us all the way up to the target. Not magic, not voodoo, just learning how to read the chart. Over the last, what was it, 300 and, hang on, let me find it. Over the last 338 weeks, over 18,900 individual handcrafted alerts. Those are alerts that go out well ahead of price triggering the alert. As I said before, often it'll be a couple of hours, sometimes in an extreme situation it could be a couple days, but the alerts go out before they trigger, not as they trigger, not after they trigger. It's a big heads up, so you can go to your chart and use the Logic 247 to read the chart and to know where to expect resistance, where to expect support, and learn how to find the window of opportunity in between, so that when price does get to that area that's in the alert, you'll be prepared to take action learn how to trade, first you got to learn how to read the chart. That's pretty simple. Now, we're still hung up right here at that 50% fib extension. We got a couple of areas for potential resistance before we get to the 62. How we closed it now, keep in mind we had a huge red candle all the way down. Okay. Had a huge red candle all the way down to the 24% fib extension. And now the 50 has acted as resistance since the beginning of the broadcast. So how we close today will give us an indication as to what level of conviction the institutional traders have. Do they want to carry this home overnight? Do they want to drive it higher before the close? The daily chart is a fact-finding mission. It allows you to see the possibilities, where your potential resistance is, where your potential support is. Okay? It's all very logical. To become a member, send an email to support@cfrn.net. In the subject line, simply put, I want to become a member. In the body of the email, put your name, your phone number. We're not going to call you, but we will send you an email that explains exactly what it means to become a passport holder. And there'll even be a link that you can click to become a member. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. It looks so simple. They figure out they can figure it out. Or they spend money on various courses, indicators, oscillators, whatever, but none of that is a replacement for a living, breathing teacher live in real time, putting on, taking off trades. While you watch, ask questions, and trade along in your demo account till you qualify to go live. Along with 2 hours of group training every day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, they're fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs. It really doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening, whether it's 5 minutes ahead of the open or on the days where it's a few minutes after the open. On Monday morning, you get the weekly trading zones, 6:15 a.m. Eastern. Unless it's a Monday holiday, then you get them Tuesday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And you're able to attend the members-only workshop every Thursday night. Plus, you get around-the-clock support via Telegram, and you get the golden key that opens all the private channels in Telegram. We have public channels, we have private channels, but once you become a passport holder, you have access to all the channels, both public and private. Just send your email here, support@cfrn.net. Okay, we shall wrap it up with our good word for the day. Now, on Friday, we talked about Don't Be Afraid of Getting Old, Part 1. Today, part 2, Psalm 92:14. They shall still bear fruit in old age. Does the thought of getting older depress you, make you anxious, or make you fatalistic in your outlook? If so, read Psalm 92:13 through 14. Those who are planted in the house of the Lord shall flourish in the courts of our God. They shall still bear fruit in old age. They shall be fresh and flourishing. So here's how to stay fresh and flourishing as you grow older. Number 1, guard your health. Studies show that good health is the number 1 factor in determining the level of happiness in old age. So try to eat healthy, exercise often if you can, drink lots of water, take your daily vitamins, and get regular medical checkups. These efforts will not guarantee you more time, but they will help improve the quality of your time here on Earth. Number 2, look your best. Dress stylishly at every age, as your budget allows. When you look good, you feel good and inspired. But keep your quest for attractiveness in balance. Remember God's word to Samuel in 1 Samuel 16:7. The Lord doesn't see things the way you see them. People judge by outward appearance, but the Lord looks at the heart. Think twice, examine your motives, seek God's advice, and do your homework before you submit to cosmetic procedures. Some can be costly and some can be downright dangerous. Number 3, look for someone to help. You will be amazed at the sense of strength, self-worth, and the satisfaction you feel when you meet the needs of others. If you haven't already, experience the joy of giving without expecting anything in return. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.